Welcome to Markets Now. I'm Michelle Ruck along with Naomi Blohm with Total Farm Marketing. A higher day in the grains, mostly lower in livestock futures. Nice to see a recovery though on Monday in the grains, Naomi. And in the case of the corn and soybeans, how much of it was just correcting our oversold status versus maybe putting in a little bit of weather premium?
Well, I think it was probably an equal mix of both. The market had just been so technically oversold on daily charts and weekly charts. And when you look at how the daily charts had um, some short-term swing objective lower, the market hit those on Thursday and Friday of last week, tested them, and they held. And so now coming into this week, we do have a forecast turning into be a little bit hotter and drier. And that is concerning, especially because the hot and dry is over Illinois and Indiana. And so the market wanting to respond to that. And that's why we saw the recovery bounce today, along with position squaring into the end of the month of May. And the funds, with as short as they've been, they need to probably show some profits on the books. So we're starting to see them maybe cover some of those short positions. Lastly, seasonally, a lot of times it is normal to see the grain prices move higher during the last part of May and into early June. But take note that early June timeframe, and especially after that June USDA report, prices then assume that the crop is planted and things are going to be really good enough until proven otherwise, and then things can work lower after that. So use this recovery bounce to your advantage and really focus on those cash sales.
What about soybeans? How much of a recovery rally can we extend here? And how much help did we get today from the soybean meal market being higher and some of this flash sale that we had?
Yeah, it was nice to see a soybean meal sale for exports today. That definitely helped things out. Looking for a recovery bounce, getting the July contract with the futures market probably back up to $14 and with a November contract closer to 13. But then we're going to run into those long-term downtrending lines at that price point. So it would take some significant weather news to get the market to go higher than that. Or if we could see some fresh demand pop up, that would be great. But just remember that Brazil crop is large and they are still undercutting us in terms of pricing and export prices. So use the recovery rally to your advantage again and focus on those cash sales.
Yeah. And in the case of both corn and soybeans, we've had a lot of bearish supply factors coming at the market, a lot of bearish demand factors coming at the market here. And especially when we talk about coming out of the WASD, do you think everything's priced in, or will the market take a little bit of a pause here and wait for weather for the next indication?
Well, I think that we are going to be keeping an eye with the weather. The market is also going to be curious to see what the producers in Western North Dakota and Central North Dakota do with Prevent Plant, because their date is coming up on this Thursday. As far as for corn, can they take the Prevent Plant um, price protection or not? Or are they going to be incentivized to keep going? Right now, corn prices are low enough that some of them are considering the Prevent Plant option. So we're going to be seeing the market talk about that a little bit. And of course, weather premium throughout, that's always what gives us some of that early summer volatility. But again, I want to emphasize that a lot of times, unless it's a 2012 drought, the market will have this recovery bounce into early June, and then the crop gets planted, and then the rain will show up on the radar, and prices work a little bit lower until we get some actual boots in the ground or better satellite imagery in July. So again, unless something weather-wise really, really substantially changes, make sure you're using this bounce to your advantage.
So you mentioned the PP acres up in the north, and of course, spring wheat has almost felt like the market is totally ignoring the fact that we may not get planted up there. So, what is your thought about the market right now, the wheat market? Was it just a follower today of corn and soybeans? Would we have been down if they hadn't been up?
Well, that's a good question, because it seems like all three wheat categories have their own story going on. As you said, the spring wheat
True.
has its own story because of slow planting up there. The Kansas wheat, we know that the crop, of course, is lower because of the Kansas crop tour that went through, but the market had been anticipating that. It pushed up to $9 and then posted a bearish reversal last week, and then we saw some profit taking come into that market, where the Chicago wheat is just stuck, just flat out stuck at that $6 area waiting for some news. So the news that broke that we are going to be importing some wheat from Poland did not help wheat today. It was very much beneficial that corn and soybeans were higher, because I think it kept wheat from falling apart. But wheat continues to need a little bit of a friendly story going forward. So for the spring wheat, it might very well be the prevent plant acres or the slow planting pace. That would be for that marketplace. And then with Chicago wheat, I'm not quite sure what it's going to take to get the funds to just really cover those short positions. We have thought that different headlines would finally get that market to come up, and the funds are just relentless to just stick with those short positions. So, not sure if it's going to take a little bit of end of month position squaring, or does it take end of the quarter position squaring at the end of June to make that happen, or just some new piece of market news from the global atmosphere. So, wheat, gotta keep an eye on all three of those cities because they all have different stories to tell.
Yeah, and we widened out that Chicago, Kansas City spread to a historical level last week, then took some profit. So we'll see what they want to do on that spread trade going forward. What about this cattle market? Down today, was that just some profit taking, do you think? Because we did score some new contract ties and feeders on Friday. And of course, we've got higher corn and the cattle on feed report numbers that came out to kind of digest today.
Yeah, so with cattle, the live cattle contracts are posting double tops on charts. The feeder cattle had extended nicely higher with that longer term uptrend that it's in. The cattle on feed report, though, on Friday was not anything over the top bullish or anything that was not already expected or priced in. So, because we didn't see anything over the top new or over the top bullish, we saw some profit taking coming into today. And I think that's a lot of what that was. The news that there was a BSE case found in South Carolina definitely, was a little bit of a headline this morning, but it was atypical. It hadn't gotten into the food system, so it's not a true threat. So the market maybe traded that headline for a little bit, but otherwise, what I'm watching in cattle is more demand. I think that we're going to see demand for summer grilling, come in here as we head into Memorial Weekend, and then we'll talk about 4th of July. But what seems to be more in demand is the cheaper cuts of beef. So we're seeing ground beef in demand. So rather than grilling steaks this year, I think people are going to be doing hamburgers. And then once we get the early summer demand met, I think people are going to focus more still on their budgets, that the inflation is still a big issue at the grocery store and still a big issue with their budgets overall. And I think we're actually going to start to see the consumer back off a little bit. I also read this weekend that Brazil beef production is actually up almost 5% from this first quarter from a year ago. Makes me a little concerned that we're going to see Brazil come in as a bigger exporter of beef. Just like they sucked the life out of our grain markets, what if they come in and undercut us for beef prices and they all of a sudden become a bigger beef exporter? So that's something else that I'm watching. I would start to take a look at ways that producers can lock in some of these higher values, just because now we're at the point where the friendly story is priced in, and we know we're going to have tighter supplies for a while. But again, I'm very concerned about the consumer demand as we start to get into summer grilling, and then what happens when the summer grilling demand kind of gets met and people start thinking about back to school and all of those types of things that will eat into their budget. So starting to get a little defensive on cattle.
Okay. And don't want to belabor this, but new contract lows again in the hogs today. What's it going to take to bottom that market, Naomi?
Well, it's going to take some sort of a major export push to push that market higher. The news of the Prop 12 out of California just is not helping anything. Or it might have
No.
to take some kind of a production issue here in this country. Just as we were kind of talking earlier before we were getting ready to tape, it just seems like anytime you're thinking that hog market is near a low, it just doesn't quite get there. So we've got some demand that needs to present itself to get that market to work higher and get some kind of a friendly story building.
I know it's been frustrating for producers for sure. All right. Thanks so much for joining us, Naomi Blohm with Total Farm Marketing. That's Markets Now.